Foreclosures are up 462% from peak to trough in the Toronto real estate market. Does this forecast some kind of disaster waiting to happen for our homeowners and the investors in the greater Toronto area? Yeah. So I'm going to be breaking all of that down, and there's a whole bunch of power of sale data that our team has collected from MLS in the last 2 years that I'm going to be breaking down and giving you an idea of what actually is happening in this segment of the market. And after watching this video, if you are like a little bit concerned about your personal situation where you may think you're going to be going under power of sale, or maybe you have a hard time with your mortgage and it can be foreclosed on, you could book a call with me to see what we can do to save your property using the link that's right here. It's www.chatwithzhen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto Area, on top of making awesome educational real estate content in the real estate space in the Greater Toronto Area just for you. And if you find any of these videos helpful in your real estate journey, whether you're a first-time homebuyer, a seller, or an investor, do me a solid and spread the knowledge by smashing the like button and subscribing to the Prime Properties channel. Very much appreciated. So, holy smokes, the power of sale / foreclosure listings are up 460% from the peak to the trough in the market. It is very much a disastrous number when you look at it, and it's very eye-popping, but let me show you the data, right? So you can see over here in this first chart, the orange line essentially represents the number of power of sale listing that's on the MLS system each month for the year 2023. The blue line is the year 2022. And you can essentially see that the orange line is above the blue line, which is kind of double every single month, more or less, for every single month of power of sale, right? Now, let me overlay a little bit more context as to what's happening in this one here. So you can see that the bottom point of the power of sale was essentially in April 22, which is kind of like a month or two after they started the rate hike. And this makes total sense because it takes time for the interest rates to trickle into the economy and, like the homeowners to feel it. And, smart economists would say it takes 18 months, for us to feel the interest rate or before any pain is felt by the mortgage borrowers, right? Which, coincidentally lines up with kind of where we are right now. I think we're like 19 or 20 months in from the first rate hike. But from that point, April 2022, to the highest point in this year is October 2023, which is essentially just last month. And that increase from those two distances is 462% increase. Yeah. Which means we're going from 8 power of sale listings to 37, right? Now, I asked our team to do a deep dive into all the power of sale listings that we could find on MLS, which is like power of sale / foreclosure. But for you to fully understand the importance of like some of these numbers I'm about to show you, I'm gonna explain to you the difference between power of sale and a foreclosure. Because when people ask me, hey, how do I find deals on the foreclosure, it tells me that they don't actually understand the difference between the two of them, right? So let me explain. Because again, most people confuse the two and they hear about like foreclosure deals in 08, but they're not the same. It's similar in execution, but they're different, right? So in Ontario, power of sale is actually the most common that we get when a mortgage borrower defaults on their mortgage. Default means like literally the first day they don't have to pay their mortgage. We actually rarely see foreclosures, right? And the main difference between the power of sale and the foreclosure, at least in Ontario anyways, is 2 components. Number 1, the timeline. Number 2, the equity position. Let me explain. The first one being the timeline is essentially how long it takes for the person who lent the money, so the lender, or sometimes we call it the mortgagor, to execute the sale, meaning how long it takes them to put that property that's been defaulted on the market. In a power of sale, the timeline to bring a property to market is like 15 days. It's really, really fast because, like I was saying, the first day you missed, they could basically move really fast and get the power of sale moving very quickly. And in most of the times, there's a power of sale clause in your mortgage document, right? You could probably look for it. Now with a foreclosure, it can take anywhere between like 4 to like 6 to 8 months plus, right? And the reason behind this is that a power of sale is essentially the seller of the property is still the owner and the person who borrowed the mortgage, who defaulted, right? They didn't pay their mortgage. The lender wants to sell it to recoup their money. With a foreclosure, the seller of the property is actually the lender, right? Usually the bank or the person lending you the money if it's a private borrower or whatever, right? And that's the reason why foreclosures take so long, because you need to go to court, right? Litigation to get some kind of judgment to take over the property so that you can actually sell the property as the lender, which ultimately why they do that is because they give them more control of the process, which I'm gonna get into a little bit later. The second important component in all of this thing that differentiates between the two is that the equity position is different. In a power of sale, the lender who is selling the property on behalf of the owner is trying to recoup the money that they lent out to the person who borrowed it or the homeowner, right? And the bank or the lender is forcing the sale, and they have a duty to get the highest price possible, and the owner will get any surplus less the money that they borrowed from that lender once it's paid back from the sale, right? So if the owner has some equity in it based on the market value after the sale, they will get some money back, right? Because they're still rightfully the owner of it. In a foreclosure, because the lender is now on title, they can essentially sell for whatever they want. There is no duty to get the highest market price to pay back the balance of it to the seller. And this is the key to why prices in Ontario for power of sale is so sticky on the way down. The lenders who execute on the power of sale have a duty to sell at the highest price possible. And that's why I've been saying for a lot of times right now regarding power of sale. Just because there's a power of sale doesn't mean it's going to be a good deal. It also doesn't mean they're going to fire sell that thing. A motivated seller who still controls the property is exactly where you'll find the best deals because they're scared. Poo-poo list, right? And the horror stories you heard in the US in like '08 from the GFC, Great Financial Crisis, was essentially because houses in US, because the call it mortgage system allows the banks to foreclose really fast and fire sell the property to recoup some money. And the key here is because they took over the title so that they could control it, and the price discovery downward was that much faster, which is not the case in Ontario, right? Because they had no duty to sell for the highest price. In Ontario, because we have the duty to sell for highest price, it is much lower because it has to follow the market down and follow the other comps to justify that, right? Obviously, there are more like tactical reasons that go well beyond the scope of this video, but this is just to give you the difference between the two. Now that you have a better understanding of kind of the difference between the two, right, I'm going to show you some of these numbers that we pulled, and they're pretty interesting, I would say, right? So shout out to our team for digging through all these listings to see what it is, right? So in the 22 months of data for power of sale, I dug up starting from January 2022, which I will remind you was super hot, super frenetic type of market. We have a total of 506 power of sale listings. Currently in the market, there's like 19,300 active listings or so. Meaning, even if all the power of listings are available right now, all 506 of them, that would only comprise about 2.6% of the entire market's active listings, which I would say probably moves the needle in some neighborhoods if there's enough of them there, but it probably won't move the needle for the entire market. And keep in mind, that's if it's all of them active right now. But as it stands, there's actually only 66 of them active, I can see below, right? Meaning that the active power of sale listing make up about like 0.3% of the current market, which is 100% not enough to move the needle in my opinion. Now, here is some more interesting data in the chart over here. Of the total power of sale listings, there were 41 of them only, or about 8.1%, that the power of sale was being forced by one of the big rainbow colorful banks, right? So your big five or big six, however you want to depict that. And I've said this many times before. The banks are not in the business of selling real estate. That's what we do. But they are in the business of lending money and making a spread on the money they lent you and how much they can borrow it from, right? So that's the spread. Which means that the other 461 power of sale listings, or about 91% of them, were executed by B lenders or private lenders. Which, if you really think about it, makes total sense because they were the ones that were lending to the high risk borrowers, or a lot of times they were lending in second decision, meaning the second mortgage, and they need to act very quickly to recoup the money they lent out, like their principal capital, or if the market keeps falling, they may have it totally wiped out. Now, I've talked about this a lot in the past before. We always went and looked at the B lenders rate going from 4% to 8% earlier this spring, and we suspected it was chaos, but nothing really happened. Well, we're seeing it right now in the increased power of sales, I suspect, because those people are now defaulting on their payments that are much higher. Now, about 44% of those power of sale properties that have been on the listing or MLS side, right, have actually sold. And the funny part is that the average selling percentage is 98.52%, which is definitely on the high side in the current market right now in like end of November. And I bet many of you would have been surprised by that. And of those ones that sold, so like 60 of them, or like 27% of them that were sold, they sold for over ask, meaning over 100%, right? It's not an important metric, but it's just another reason why I keep saying power of sales aren't guaranteed to be where you all can find a good deal. Now, I will say though, caveat, right? Some of them I did see to sell for like 79%, but like that's, totally on the low side, but the average is still at 98%, which is very close to ask. And this comes back to duty of sale to sell for market price, right? Because the lender who is forcing the sale must on behalf of the owner, recoup as much money as possible, based on the market value. And it takes time for them to slowly drop the price because they have to look at other properties that are comparable to them to actually sell and drop the price before, they actually sell. And now here's a fun fact before I sign off. Of all the big banks that I looked at that did power of sale, so like, again, your rainbow ones, Scotia only made it on the list once. It's funny, right? The only bank that isn't negative amortizing, right? Meaning that their mortgage products have been going up on the variable side when Bank of Canada was raising their interest rates. So that makes me think, is it because an impact like this, Scotia borrowers have been still making the payments and they're not forecasting, which tells me there could be some kind of foreshadowing that maybe Canadians can absorb these higher rates right now, right? Who knows? I don't know. This is just a guess because that's the only thing I can comprise of and think about for why Scotia doesn't pop up as much as the other ones, right? Just a thought. Anyways, I hope this video was kind of helpful in your real estate journey. And if you have any questions about like your specific property, like your personal situation, on the off chance you think you may become one of those 500 plus power of sale listings and you're not sure what to do to kind of save your property, you can book a call with me using the link that's right here, and we'll see what options you have based on your personal situation. And then if that doesn't work, then yes, sometimes it is better to sell before the banks force you to sell, right? But we'll obviously try to keep your property as much as possible in the beginning, right? Hopefully this helps. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?